Lots to cheer about. Can this cheer continue? How long can it sustain? Who better than Madhu Kela highlighting all of that? Madhu, hi, good afternoon. Good to have you on the show as always. And what a fabulous rally, Madhu, in store. But the question is the market already pricing in a replica of 2024, what we've seen on the state elections, or do you think the party has just started?
So good to have you. Good to be here, Aisha. As usual, very nice talking to you. So, Aisha, these are the times for which we have been dreaming, right? For last 25 years, that India will be at the forefront, and this all seems to be happening. 1 month back, we touched $4 trillion GDP. We touched $4 trillion of market cap. So all the right vibes, everything seems to be coming. Now, if you are an investor, Aisha, and if you have a view of 2-3 months that I don't know, right? In 2-3 months anything could happen. But I think this state election is a bigger verdict really in favor of the ruling party, and it gives kind of a certainty for 2024 election significantly that there will be continuation of the same party and the same policy given the election results which have come. And considering that inflation has been very stable, interest rates have been very stable, currency has been very stable, and there is no major volatility in any of the front, right? And the fiscal situation of the government is also very stable. So this all points towards more higher valuation than what we have seen in the past. So, Aisha, I remain very bullish on the markets, and also fact that market made a new high maybe a year back, and after that also it has consolidated, and we have not even gone to touch 18,600 after it was decisively being taken out. So I remain very positive. You have to be constructive, we have to be an investor, and we have to take 3 to 5 year view. I think still a lot of money to be made here.
And that's the other thing, Madhu, like you rightly highlighted, that in events like this, fair value itself gets redefined, right? Then you sort of get a colored vision. You don't want to look at price multiples. You don't want to go by historic value of businesses. And there is that FOMO feeling which sets in that, why didn't I put in more money? I could have cherished the rally in so-and-so stock or the index also so much more. What do you have to say investors like that?
I think, I said the fact is that, markets are never ever in right place, right? Either they are significantly overvalued over a period of time or they are undervalued. And who knows what the right valuation is. With the only valuation parameter which we have is that of the past. So supposing, let's say, when I had just started working in 98, 2000, and if I said that 25p multiple is a high multiple for technology company, actually I would have missed out the biggest gain in the history in that sense at that point of time, because that 25p became 200 in times to come. So where these kind of sentiments can take markets to what valuation, we don't know. The only yardstick which we have to see that the valuation today are expensive is the historic valuation. The other important point which I want to make, Aisha, that yes, markets are expensive, there is no doubt about it, from a 12-month perspective. But there are investors who are willing to pay, let's say, take 3 or 4 year view, specifically even the foreign investors who are willing to take 3-4 year view. If I couple that with the certainty of growth in India, right? So then market doesn't look that frothy or that expensive if I take a 3-4 year view. So I'm sure people who are joining the party late, either they will have to take higher risk or they will have to commit the money for a longer period of time. There is no other way to make money, right? So I am sure people who are coming in today, they have to have a higher time frame to make reasonable return. That is what I would like to say.
Hi, Mr. Kela. This is Anisha also joining in the conversation. Well, one point that everybody is talking about now is that it's going to be a ferocious rally for the next 5 to 6 months. ahead of the general elections itself, and we are likely to see 24,000, 25,000 levels on Nifty. Would you concur with that view, or are you thinking that this is a bit of an over-exuberance?
I would not, like to comment on a specific level of Nifty. The school of thought from where we come. We know the broad direction of the market. We don't know these numbers. Neither we would like to guess the numbers. But markets are very strong. That much I can tell you. The breadth is very strong. Even today, after we have had roughly 1,000 point rally in the last 10 days, and even today, market is literally trading at the high of the day. And people who have not participated, I can well imagine and sympathize with them. They must be feeling really left out and frustrated, right? And also the fact that if you have not participated in the right stock, you may have bought the biggest and the best of the blue chip companies in the last, last 24 months or 36 months, and may not have made any money. There are so many blue chip companies where hardly any money is being made in the last 24, 36 months. Someone sent me the full list of maybe 50 companies where there's no money being made. So you have to be rightly invested. So I think the broad direction of the market is quite positive. I would not like to hazard a guess on any number.
Broad direction is quite positive, but since you're talking about those blue chip stocks, these are largely from, large caps and those Nifty 50 kind of stocks rather than mid caps and small caps. So incrementally, if you had to put if you incrementally had to put money, Mr. Kela, would you put it in the large cap names or the mid cap and small cap?
So I would like to, continue to hold what I am holding on. Basically, that is the bigger thing. And I feel that large caps will also do well here from here on, because if the money comes, it will, even from the foreigner, given the sentiment and given the overall stability, then the first round of money will come in large cap. And we are already seeing that some of the large banks which were not moving even for last 2 years, we have seen some movement happen in the last 10 days or so. So I would say, it's not about cap. I don't invest like that in large cap or small cap or mid cap. We invest, wherever there is an opportunity, we invest. And today, we can even see opportunity in large cap stocks.
Okay, what's your view on the public sector enterprises? This year clearly have belonged to them. It's a major re-rating of sorts that has happened. Do you think more legs to this one as well, whether it's power, defense, railways, insurance as well, LIC for that matter?
I think public sector as a whole, there is a lot of potential. I'm sure we have spoken in your channel only a lot of times. They seem clearly the leader of this bull run, this leg of the bull run. There is 30 lakh crore rupees or more wealth which has got created in public sector companies, all put together in last 3 years. Right? So some sector may consolidate because of the very steep price hike or very steep price hike in certain stocks. But I think there is a lot of value still in public sector companies, and you have to choose the right stock to be able to make money. And given that, given that market is feeling there is certainty about the continuation of the same government, then you can imagine, what will happen in the next 5 years. There could be possibility of large scale disinvestment happen in the next term on this government. And if you consider all of that, and if you consider that the valuations are not yet anywhere expensive or euphoric in a lot of these companies, I would say stock specific money to be made in public sector companies.
Is the tactical strategy also to not look at market caps and be market cap agnostics, look at individual businesses? India has always been a stock pickers market. Yes, there are the themes that like PSUs, which sort of work as a blanket trade in exceptional categories. But largely, we are a stock-specific market and will remain so. And for all the naysayers or rather the doubters who are wondering how much more rally do the mid and small caps have from here, they shouldn't be questioning such.
Aisha, this is the beauty of our market, that if you compare this market with any other emerging markets, we have really good breadth of sectors and we have really good breadth of companies here, right? And there are so many good, interesting businesses which have got listed and which are getting listed. this level of activity in the IPO market, in the QIP market, we have not seen in the recent past. You are absolutely right. Rather than saying that I want to buy or I don't want to buy mid cap and small cap company, I think it is important to say that this is the company which I like and this is the company which I want to buy. And now it may well be from a small cap sector, it may be well from mid cap sector, it may be well from large cap sector. So the right way to look at it is bottom up, right way to look at it is do a lot of work, be sure about the promoter which you are betting on, be sure about the business which you are betting on, and be sure that you are not paying very expensive valuation to enter such companies. And I think there are dime a dozen companies, even now, Ayesha, which are available where money will be made in the next 3 years, if you have a view of that kind, in the mid and small sector companies also.
Without giving names, do highlight where are such pockets of hidden gems?
Yeah, I think we have discussed, Aisha, honestly, I hate to repeat, it is like a buffet. You eat what you want to eat, but don't overeat. That is the message. I think these companies are there. You can see it in select financial sector, select banks which are there, select infrastructure, select PSUs which we discussed already, select manufacturing companies. So it is about being able to dig, and it is about being able to be on top of the company which you are investing in. But trust me, Aisha, I am constrained to give a name, but if I had to give you a name, I can even utter 10 names today to say that these are the companies which are likely to do well over the next 3 to 5 years.
Company specific names, but what about financials as a sector? Because they've underperformed massively. Do you think that could be a complete reversal come 2024, be one of the big outperformers?
I would say so. I think there is a lot of margin of safety in financial stocks. I think the banks and the companies have done really well, and the markets have also consolidated in this particular sector. And the worry of the US interest rate being so high, inflation being so high, that also seems to be moderating now. So I think the risk reward is quite compelling in banks and financial services. But you have to be, again, very stock specific. You see, you can't generalize these things. When we spoke about the public sector banks, a lot of my friends call me and say, public sector banks have not made any money, and there is governance problem, this problem, that problem. But the fact of the matter is that you have to have an open mind. And you see how much money is being made in public sector banks in last 2 years versus even the large, well-reputed private sector banks, right? So I would say that in banks in general, there is opportunity both in public and private sectors.
Okay, so financials is one of those sectors, but the other theme, Mr. Kela, that everybody has been talking about is the consumption and urban consumption and the entire premiumization wave. What are your views on that, and which are the companies or themes that you would like to play it with?
So I think this bucket was kind of underperformer again from last 2-3 years, because 2-3 year perspective, because some companies in this bucket had become expensive. But this is clearly a theme, right? From a 5-10 year perspective, it's clearly a theme. And again, it is not to be played by a sector, but it is to be played bottom up, because you can find within this theme you can find a reasonably valued company also, and you can find a very expensive company also. To categorize as a sector may not be the right thing to do. You have to be able to find the right entrepreneur, the right business, and the right opportunity, and right risk reward. And Aisha, we have seen too much market in last so many years, right? And it's not that because Nifty is up 500 points and the times have changed, so we have to buy shares today only. There is a time to do research. You have to keep it ready, and I'm sure market one way or the other keeps giving you chances in individual companies and the market as a whole. If you are prepared, then you will be able to respond to that chance.
About you, but we don't see that opportunity coming where you can wait it out and sit on cash and you will get that big dip coming in, and hopefully we shouldn't even get that. But you talked about construction. Just wanted to understand where within construction do you find opportunities? Because now in this entire large real estate, construction, infrastructure umbrella, what one is seeing is that it's the ancillaries which have done way better than the pure play companies.
So I said, we are invested with full disclosure in a lot of EPC companies, and we track some of these EPC companies very, very closely. They are into water segment, they are into pipes, they are into the overall EPC segment. If you look at the qualitative improvement in their order book position, if you look at qualitative improvement in their balance sheet, if you look at qualitative improvement in their cash flow, I think it is very, very significant. And in this particular area, if you see, even the competition has actually lessened significantly. Right? A lot of companies which were operating between 2003 and 2010 have left this space or closed down, or so the competition has also gone less. So we like a lot of these EPC companies and the businesses because the order book position is hugely in our favor. There is a visibility of our revenue growth, and margins are improving. And I think that these companies are not overly owned or not very expensive as well.
Madhu, much like the undervalued pockets in the market, do you get the fear that something's looking frothy also, where you would say that, you know what, this is it, let's not get too greedy here, it's time to take profits off the table?
Clearly, if you see a lot of individual companies in small cap have really, really gone significantly higher. See, wherever I think, if you think the multiple is very high and growth or earning or ROE, ROC and cash flows are not supporting that kind of a multiple, I would stay away from the best of the companies. See what has happened even to large FMCG companies in the last 3 years. These are great businesses and they have delivered phenomenal value. But there came a point wherein the valuation did not justify the earning growth as well as the overall valuation, right? So, which is why you are seeing so many of these companies, in spite of being bluest of blue chip, are underperforming for last 3 years.
You said financials could be one of the sectors where there's value, the risk reward is favorable. What about pharma as a sector? Because that too hasn't done much. It's started showing signs of some sort of, buying interest coming back, but not with a very high conviction.
So pharma sector has underperformed. If you look at, the performance of PSUs versus pharma sector, so a lot of pharma mid-sized companies are down 30, 40, 50%. And on the same time, markets have gone up quite a lot. So, and there is considerable improvement in the last 2, 3, 4 quarters in terms of their EBITDA margin and in the balance sheet also. So we do like some of these mid-sized pharma companies, but they are like part of a portfolio. Like, in this market, there's so much to do. So you can't be putting all your money into one segment or one sector. But I do like, and we do own some of these pharma companies with a medium-term time frame.
Before we let you go, one last question from my end. You've seen markets for many years and decades now. Would you think this is the best that you've seen for the market? People are calling it the golden era for Indian economy right now, a Goldilocks scenario. Would you agree that this is the best time to be in the markets right now in your own experience and career?
I would agree with you. Last 3 years have been really exceptionally good for the people who have had faith, who have stayed put, would not try to jump, would not try to time every 1,000, 2,000 points up and down. And I think it's been a very good era. And I somehow, based on my experience of last 30 years, I somehow feel that everything is falling in place. You have the participation is the highest. You have 13 crore people now who have Demat account already. In the breadth is very good. a lot of good companies are getting listed. And India seems to be in the forefront of the discussion even among the globe. So I think that, we have had some very good time for investors. And I personally feel that the next 5 years are going to be really very good time for India and investors. The whole thing is that you have to be able to identify the right companies, sit through the volatility, take a medium to long-term view, and just enjoy the party.
Absolutely. And like Madhu, the viral saying right now is, it's just looking like a wow.
Yeah, absolutely.
Okay. Good chatting with you, Madhu. Thanks as always
Okay,
for
Aisha,
taking the
thank you
time
so much.
out.
Thank you. Thank you so much. Yeah.
Okay.